Okay, well, my name's Julie David, and hopefully we are successfully recording this interview. I am with Josh Bauerle, who is in Denver, Colorado, and I am so excited. He is a CPA, and he is who is doing my taxes. So he has agreed to answer some of our questions that we've got because especially as new jewelers, we're all very nervous about how we keep track of our expenses and our mileage and what forms we have to fill out. And so he has graciously agreed to just kind of answer our questions and make us feel a little more comfortable. So the first thing, welcome, Josh. Thank you so much. I appreciate you coming here and via Skype and doing this interview.
Sure, excited to be here. I know this is everyone's favorite topic.
It is. And I wanted to ask you first off, just a basic overview of what the girls need to do as far as their profit, their expenses, the commission. What is just a basic overview of what they have to kind of keep track of that you're going to want when you go to do taxes?
Yep. So the big thing they're going to want is the actual profit of their show. And to get that, is going to be the total value of their show, which I believe Premier gives you now when you submit a new show, right?
Mm-hmm.
So you'll take that total value, then you'll subtract the cost value or the commission value of the jewelry. And then from that, you'll also subtract any expenses you had associated with your show. So mileage, the supplies, meals if you had to do a meal with a hostess or something, anything like that. And you subtract all those from the total cost of the show, and that's going to be your profit, and that's what you're actually going to be taxed on.
Okay, and so those of us that have earned free jewelry or have people on our team so that we actually get a commission check on the 10th of the month, get a 1099. And so how does that play into our taxes?
Yeah, so Premier's going to issue a 1099 at the end of the year. It's going to have the value of all the commissions they paid you, the free jewelry you got, and any trips you won. And from there, you're just going to have to subtract. So you're going to list the expense of that jewelry they gave you as an actual expense. So you're taking out the profit. They kind of wipe each other out. Does that make sense?
Okay, so we're going to get our commission. So for instance, let's say a new jeweler has 3 girls on her team, and over the course of a year, she's made $2,000. So she would put the cost, the retail value of her jewelry. That would include the half price amount and everything she sold to her customers, but that total big amount. Then she would add in that $2,000, the commission, and let's say she got $200 in free jewelry, so there's another $200. And then we're going to get to what she subtracts out, and she would subtract out the CV or the cost value of the jewelry, and then she'd actually subtract out those jewelry certificate amounts plus the tax she spent, because we want to just kind of eliminate it so that we didn't make any profit. We don't have to actually pay taxes on that. They'll just counteract each other. And then any expenses and mileage we would subtract out. And the bottom line is what you take and we get to pay taxes on.
Exactly.
Okay, and so what form does that go on? What's the form that you're going to use to put all those numbers together?
Yeah, so for most people who are sole proprietors, which almost everyone is unless they set something up, it's going to go on what's called Schedule C. So you're just going to give those numbers to your tax preparer, and they're going to put it on Schedule C for you.
Okay, so is there some paper that can we just go old school and write in a notebook? Obviously, Hood and House is really a great way to organize it. I understand you're even kind of creating something that on your website they could even buy if they didn't want to do Hood and House, but what would we give you? Do we just give you the bottom line numbers and we could just keep this as something on a notebook?
Yeah, so I definitely recommend Hood and House if you can get it. I do a lot of Premier people, and it makes it super simple if you have it. If not, you can do a simple Excel spreadsheet. Basically, what your tax preparer is going to want to know is the final numbers for everything. So what's your actual profit from your shows? What expense was in each category? So what your meals and entertainment was, bottom line. What your office supplies were, bottom line. We don't need to see your receipts. We don't need to see each purchase you made. We just want to see the bottom line numbers for everything. So it's actually really simple for what you're going to give them.
Okay, well, one question I get a lot is, what are some good categories? Because there was a period of time where I was making 5 million categories, and so now I have all these categories in Hood and House, and we get so confused. I mean, are there like 7 basic categories that we should have and just dump it all in there the best way we know? And are we making a mistake if we put it in the wrong category?
Yeah, it's not a huge mistake. The big thing is to get them all in there. But yeah, the main categories I would say, especially in your business, office supplies, big one. Meals and entertainment's a big one. Travel expense is a big one. Mileage obviously is separate. And then you'll have what various miscellaneous expenses like your cell phone you want to list separately. If you bought any computers or printers, any equipment like that. But one thing they can do is actually really easy. If you just Google a Schedule C, you can see what form they're going to put that on, and it'll show all the expenses or all the categories.
Oh.
And it's actually really simple.
Oh, because on Schedule C, you'll actually put this items into the categories.
Yep.
Oh.
So if you just went into Google and type Schedule C, the form that we use would come right up, and you can just see every category that's used.
Oh, well, that's fantastic. Okay, let's break down some of those because some of the new girls especially don't understand. So with meals and entertainment, that's a special one because we only get to take half of that, but it gets really confusing if we choose to half it. Like, I understand you want to be the one. You want to see what your the total meals and entertainment is, which would be if we took somebody out for coffee, out for lunch, if we took our girls out to the movie, it was a premiere event, that would be entertainment. So meals and entertainment. We fill that all out, and as long as we label it meals and entertainment, you'll know to take half of it.
Exactly. We want to see the total amount. So anytime you went out with a fellow jeweler or a potential hostess or potential someone you're going to sponsor in the business and you paid for any kind of coffee, meal, anything like that, add all of that up, give your tax preparer the total, and we will cut it in half for you.
Okay, perfect. And then we mentioned computers. We all obviously need techie things in order to make our business easier. So, for instance, I got a computer last year, so that'll be on my income tax expenses this year that you'll see. And it's just a matter, you said, of the percentage that you're using it, of how much of that you could take. So it's your judgment call.
Yep. Yeah, this applies to anything that you use for both personal and business. So your cell phone would fall into this as well usually. So if you buy a computer, you use it 80% for business, 20% for personal. It's really just your best guess. You're obviously not going to sit there and keep track of every hour you're spending for each. So most people tend to go with 75-25 range, 75 business, 25 personal. And you just let your tax preparer know that. You tell them the total cost of the computer is 75% business. So if you paid $1,000, you get to deduct $750 for business.
Okay. And we even talked about this for our recent Disney trip, because that was obviously personal, but it was also premier, that I could take a portion of just Philip and I, because we're the jewelers, plane tickets and meals and things, etc., but not any of the kids.
Exactly, yep.
Okay.
People who are actually involved in the business.
Right. Okay, and then just talking about the cars and talking about mileage, let's talk about how to keep track of it. And some people ask, do I keep track of my mileage? Do I keep track of the gas that it took me to get there, and the all these little teeny things? And obviously we encourage just the mileage. It's so much better. So explain how we're going to keep track of that.
Yeah, so there are two methods. You can keep track of every little expense if you want to. 95% of people don't do that. The way I'd recommend doing it is just doing the standard mileage rate, like you said. So all you got to do is, when you make a business trip, just keep track of why you're going there and how many miles you drove. So you had to go to Walmart to buy office supplies. It was 10 miles away, 10 miles each way. So that was a 20-mile trip. And you just keep track of all those. And anytime you're driving to a show, keep track of those miles. And at the end of the year, you just give the total mileage that you drove for business to your accountant. And what they're going to do is give you the mileage rate, which for 2013 is 56.5 cents. So basically, you're going to get 56.5 cents for every mile you drove for business. And the other thing they're going to want to know, just look at your odometer at the beginning of the year, look at your odometer at the end of the year, and give them that number as well.
And the one thing I love about mileage is I don't need to share my trip, my percentage. So if I'm going to go to Walmart and buy my groceries, but I buy ink and paper and envelopes and maybe a gift for a jeweler, my whole trip to Walmart is an expense. So if you're going to make a long trip, especially to family, do a jewelry show. And if you do travel to say you live in Denver, Colorado, and your mom is going to come out there to visit you to see those beautiful twins that are coming soon. If she were to do a jewelry show, then she could take her plane ticket as a tax deduction, even though she's coming to see those twins.
Yep, absolutely. That's something my mom actually is in Premier, and she does that all the time. She'll come out here, and she'll plan 2 or 3 shows while she's out here, so she can take at least a portion, if not all, of her trip expenses.
That's awesome.
The way that works is if the majority of your days, so let's say she's here for 5 days, if 3 of them are spent on jewelry shows or anything jewelry related, she can take the entire trip. If less than the majority are, then you just take that percentage. So let's say 40% of your days were used on premier stuff, then you can take 40% of the cost of your trip.
Okay. Very good. Okay. All right. So let's see here. What other questions do we want to ask? Well, let's talk about receipts. I have like an accordion envelope and then those 7 categories. And then I just stick them in there by category, right? You want us to do category, not month, January, February, March, April.
Yep. Yeah, that's a mistake a lot of people make. They'll hand me something with just monthly expenses. We don't care about the month. That means nothing to us. We want to know the category. So. And
now I understand because you actually put that on the Schedule C, each category. That makes it make so much more sense to me now. I've only been in Premier 7 years, and it finally clicked. Okay, and then one of the things that I just wanted to give a tip about what I do with my receipts is that when I log my receipt in, whether it's on paper or Hood & House or an Excel spreadsheet, then I put a check mark on it, and then I put it in. So I have a box where the receipts go, and then once they're checked in, they go into the category of the little folder. But then the other thing I do is I put a check mark on it so that way I know. And then I put an M on it for mileage when I've logged it into my mileage.
Okay. That's a good idea.
So little thing. But you were also saying one of the second thing that I do is I take my credit card statement. So I like to have just one credit card for Premier, and then I have the Jeweler Rewards card, and then I have my bank statement. So those are 3 things that I deal with. And then what we do is we take that bank statement and we cross-reference it with the list of expenses because they're in order, so it's pretty easy to just check them off and make sure they're there. But you were saying that it was okay, even if you lost a receipt, as long as it's on that bank statement and you can note what you spent it for, you can use that as an expense, even if you don't have the receipt.
Yep, the IRS does accept bank statements or credit card statements as receipts. The only thing with it, like you mentioned, you'll want to note what you... So like if you went to Home Depot to get a bunch of business stuff, you got to kind of mention what it was about, because if the IRS just sees $200 at Home Depot, they can argue and say, well, that could have been personal. We don't know.
Okay.
So just make a quick note of what you actually spent the money on there.
And then things that are under $75, for instance, we usually pay $5 to go to training, and you don't necessarily get a receipt, and you pay cash. Yep. So those are the things that you can just go, I know I went to training, in all 12 months because I'm a really good jewelry lady who always goes to training. So I will note, 12 trainings, $5 a piece. Here's what I spent.
Yep. Yeah. If it's under $75, don't stress too much about having a receipt or proof of that. They're not going to worry too much about it. But yeah, if you can note you went there 12 months, it's easy as that.
And then I loved what you said. There's a change this year as far as home office. You want to explain that?
Yeah, it's great. So typically, before when you took the home office expense, you'd have to keep track of all the utilities in your house.
It's a pain.
All the supplies you use to clean the house, every little thing. Then you'd have to multiply that by the percentage of your office versus your whole house. So this year, they've done away with that. All you have to do is figure out how many square feet your office is, and you get $5 per square foot.
And I think that's better. I think that's more, because thinking back about what I've usually gotten, it's always just been like a few $100s here, a few $100 there. Yep. And so that sounds really great. I'm excited about that, the simplicity.
Yeah, me too.
What about, so like if we did if we buy office furniture for our office, and explain what you were saying about what defines an office.
Yeah, so this part they are really strict about. It has to be something that you use for just an office. So you can't go and put a computer in like a guest bedroom or a kid's playroom and say, that's my home office. You have to say, this has no other use except my home office. And that's what they'll accept as a home office expense.
Yeah, so they say, like, if you do use a bedroom, just don't put clothes in that closet.
Exactly.
Let that, yeah. So, okay, so what about, I wanted to ask you a little more about taxes. Let's see here. Let's talk about our cell phone. How do we keep track of our cell phone expenses, and how much can we take?
Yeah, so this is similar to the computer. It's just going to be a percentage of your business versus your personal. And again, the percentage I see mostly used is either 75-25 or 50-50.
Or
That's what
50-50.
people break it down as.
Okay.
And what you're going to do, so you'll just take the total bill. And actually, this is where it gets a little harder. If you're on a family plan where there's a lot of people on one plan, you'll kind of have to figure out what your total of that bill was. So a lot of people just say it's $125. That's usually about an average price.
Okay.
If they're on a family plan. So they'll take $125 times 12 for the year, and then multiply that by the percentage they're using for business. So
Okay.
if it comes out to 1,000 total, 75%, you get to take $750 of that.
Okay. Okay, good. Okay, great. And then, let's see. We've covered a lot of this stuff. Can you think of anything else we wanted to talk about that we didn't?
Yeah, I know we were talking a little bit about what happens in the event of an audit or what you
Oh,
can do.
yeah.
I know that's something a lot of people are really worried about, obviously. It's every taxpayer's worst nightmare. But the first thing to keep in mind is it's extremely unlikely you're going to get audited. It's well under 5% of total people that do. So don't live in fear of it. And even if you are, as long as you're tracking your expenses and you're keeping documentation, you really have nothing to worry about. All they're going to do, they're going to come in and say, hey, we have some questions about your business. You claimed $200 in meals and entertainment. Can you prove that to us? And you'll either give them your credit card statement or your receipts you have and say, here's what I have. And they'll say, okay. So as long as you're tracking your expenses, you're not doing anything illegal, you're claiming all your income, you really have nothing to worry about with an audit.
And what if it, how long should we keep our receipts?
Yeah, so they recommend 7 years is what they claim. Do it at least 3 years. They usually won't go back more than 3 years to audit you.
Okay.
But if you can, do it all 7.
Okay, that's great. And then I just lost whatever question I was going to ask you. I have another follow-up for that. But in the meantime, talk to us about paying our kids to help us.
Yeah, so you are allowed to pay your kids in your business, and they have to be over 7 genuinely, because they're not going to believe that a 4-year-old's filing papers for you. But as long as they're over that age, you can pay them money to work in your business. And the great part about that is you get to write it off as an expense in your business, and as long as you keep it under $600 for the year, they don't have to claim it or file a tax return. So let's say you have 3 kids, you paid them $500 each, you get to write off $1,500 in your business, and they don't have to claim it as income.
And
if you do pay them, go ahead.
I was going to say, and I just put that, I keep it simple. I have it, mine are 12, 12, and 8, and so they help me about that much. So that's pretty accurate, loading my car and stamping my order forms and things like that. So I just dump that money in a savings account for them. I don't even, we don't have to literally give them the cash. We can put it in a savings account for them.
Yeah, and actually the other really cool thing about that is if you wanted to open up a retirement account for them, you can actually open up a retirement account once you have earned income, and you paying them gives them earned income. So if you want to get them started in retirement at 7 years old, you can do that by paying them.
Well, what about, I have an assistant. So explain the difference between her coming and going and doing it in her own time frame versus me requiring her to arrive.
Yep, and it's a big difference because as long as you don't have control and she can work from home or she comes to your house sometimes and she's just working here and there, she's what's called an independent contractor, and that means you don't have to pay any payroll taxes on her. If you were saying you have to be here every day from 8 to 5 and you work here, she's now an employee and you have to pay those payroll taxes. So it's really big if you're going to have an assistant to keep them as an independent contractor.
And, we can't take babysitters as a tax deduction. But if you have a babysitter and she comes over and she stamps your order forms and puts some some receipts into your computer while she's watching the kids, now she's an assistant, right?
Yep.
So,
yeah, I've actually never seen someone use that strategy, but it's absolutely true, and it's a great strategy.
Oh, Josh, I'm all about strategy.
I see that. We have to get that one out there.
My mom is going to come while we go on the cruise, and she will be putting receipts in while she's here because I'm paying her. So, okay. So, but one of the things, if that scares you, if you're like, well, I need a little help around the house, but gosh, I don't want to deal with that, then just have different teenagers that come and just don't pay any one of them more than $600 in the course of a year, and then you won't get into that kind of a problem.
Exactly.
Not that it's a problem, but
Yeah, and actually, if you keep them as an independent contractor, even if it's over $600, it's not a big deal. All your CPA has to do is issue them a 1099. It's actually pretty simple.
Oh, yeah, because it's our kids, then we have to do a tax return for them.
Yeah, you have to file a tax return.
But obviously, my assistant definitely makes more than $600. So yeah, and then I just issue her a 1099, and we're good. Yep. Okay, that's great. Okay. I know. I wanted to talk about something that we do a lot of, which is fundraisers. So we as jewelry ladies, in order to get shows with people, will sweet talk them, and sometimes it's an actual tax deductible organization like a church or the Susan G. Komen Foundation or something. But sometimes it's not. Sometimes it's my neighbor is hit a hard time, and so we're going to do this. Or I just did one for a little girl that was trying to raise money to go to Paris for band. So how do we deal with that?
Yeah, so if it is a tax deductible charity, that's easy. You just list it as a charitable donation. If it's not, you're just going to list it as like a hostess expense. Just give that to your CPA, and they'll know where to put it. And basically, what it is, you're paying them a little bit to do the show, so it is an expense for you. Okay,
and so let's wrap it up by just I've had a lot of people tell me that, especially husbands, when I'm talking to them about becoming jewelers, they're really interested in Premier just because of the tax benefits. When you own your own business, even though this seems scary because there's extra stuff we have to do, the tax benefits of owning your own business versus just being an employee of Walmart or whatever are so great. So just kind of give us a little quick picture of why that's awesome.
Yeah, so as an employee, what happens is you get paid. Before you even get paid, they take the taxes out. You get to deduct almost no expenses associated with your job. And the expenses you do get to deduct, they kind of limit them. They subtract 2% automatically, and just a real headache to do it. As a business owner, what you do, you make the money, and then you pay taxes later, which is already a huge advantage. On top of that, you can deduct anything that's involved with your business, any meals, everything we've talked about, office supplies, computers, expenses that you'd already had, even your cell phone, that would be there anyways. Now you're deducting a portion of that. Your computer would be there anyways. Now you're deducting a portion of that. So the tax code is written with huge benefits for business owners.
That's so great. And so, as I already said, you're going to be doing my taxes. You do your mom's taxes. So that's, Kathy Fall. She's a big person in Premier. So obviously that says a lot for your credibility and your capabilities. So really excited about that. So if some of the girls want to have you do your taxes, how does that work, being that you're so far away? However, I am going to encourage you, because I'm sure your mother would like that. I hear you might move eventually to Ohio, so we're rooting for that. But in the meantime, how does it work if they wanted to have you do their taxes being so far away?
Yeah, so actually my entire business now is set up this way, where people don't come to my office and give me their stuff anymore. They just either email it to me, if they can scan and email it, or they mail it to me in the mail. So they'll just get all their stuff together, either scan it in and email, or just put it in a package and mail it out to me. I'll do the taxes, get it all e-filed, and then mail or email it back to them.
So that's why
it's a lot simpler than it sounds.
Yeah, and having Hood & House makes it so easy, because you've got these summary papers, and they're already in PDF form on your computer, and So last year when I did this, it was so simple. All I had to do, and in fact, Premier also has our 1099 online. So you just grab the 1099 online, you grab the summaries of your expenses and your profit and loss from Hood & House, off it goes, and then bing, bang, boom, you're done.
Absolutely, yeah. If you're doing Hood & House, you're going to be done. You're going to have all your stuff together in 15 minutes or less.
It's crazy. It's crazy.
Yeah.
Well, any last minute things you think we forgot to talk about that you think we need to?
No, if they are interested in having me do them, I do only take a certain amount every year, so get in touch with me as soon as possible, and I can give them a quote on what it would look like. But yeah, the tax stuff is scary for new business owners, but it's really simple. Once you get a system in place, it's super easy. You
have a website? Do you want to give that, or your email?
I do. I have a website. Actually, you can get a lot of tax strategies. I have a lot of articles up there about what they can do and what can help them in their business. So they just go to www.cpajdb, as in Joshua David Bauerle. They can get that there.
.com.
So contact form as well.
So say it again, cpajdb.com.
Yep.
Awesome.
And I'll email that to you as well. So
okay, that's great. Well, thank you so much. I hope this recorded.
Yeah, I got recorded on my end too, so I think we're good.
Okay, that's awesome. Thank you so much.
Thank you for having me.
Okay, bye.